Well, ladies and gentlemen, welcome back to Boss Economics World, the only show that takes the dismal science of economics and turns it into a full-blown circus of absurdity. I'm your host, the guy who's been screaming into the void about tariffs, inflation, and global trade wars since before it was cool. And oh boy, do we have a doozy for you today. Grab your popcorn, your wallets, and maybe a stress ball, because we're diving headfirst into the copper-colored chaos of Donald Trump's latest tariff tantrum. That's right, folks, 50% import duties on copper products, a global market meltdown, and a White House that seems to think economic policy is just a fancy term for throwing darts at a map. Let's break it down, shall we? So, here's the deal, folks. Last week, between July 28 and August 3, 2025, the global copper market went into full-blown meltdown mode. Think Wall Street traders crying into their lattes, futures contracts plummeting faster than a lead balloon, and enough economic jargon flying around to make your head spin. Why? Because Donald Trump, the self-proclaimed tariff man, decided to slap a whopping 50% import duty on over $15 billion worth of copper products that hit U.S. shores in 2024. We're talking semi-processed goodies like wires, tubes, rods, and even the cabling that keeps your Netflix binge sessions alive. And just when you thought it couldn't get crazier, the White House is now cooking up a plan to tariff even more copper-intensive manufactured goods in the next 90 days. Because, why stop at chaos when you can aim for catastrophe? But wait, there's a twist. In true Trumpian fashion, the man threw a curveball by exempting refined copper from the tariffs. Yep, the stuff that makes up 900,000 tons of imports and $8.4 billion in value. Totally spared. Why? Because American buyers, think big manufacturers, construction firms, and tech companies, threw a collective hissy fit, warning that tariffs on refined copper would send costs through the roof. So, instead, we've got a half-baked policy that's got everyone scratching their heads, investors panicking, and the US copper market looking like a clown car on fire. Now, let's zoom out from the surface-level madness and talk about the real beast lurking in the shadows, inflation. You see, folks, copper isn't just some shiny metal you use to make pennies, it's the lifeblood of modern economies. It's in your phone lines, your internet cables, your cars, your power grids, and even those fancy electric vehicles everyone's obsessed with. And when you jack up the cost of importing copper products by 50%, guess what happens? That's right, those costs don't just vanish into thin air. They get passed on to you, the consumer. Higher costs for manufacturers mean higher prices for everything from construction materials to your next iPhone upgrade. Welcome to Tariff-Induced Inflation 101, folks. Let's put some numbers on this, shall we? According to Bloomberg News, the tariffs will hit $7.7 billion worth of semi-processed copper products and another $7.7 billion in cabling. That's $15.4 billion in imports now facing a 50% tax. And here's the kicker, the U.S. International Trade Commission tells us that the U.S. imported 600,000 tons of semi-finished copper last year, with 35% coming from Canada, and the rest from places like Germany, South Korea, and Mexico. Now, sure, Canada might catch a break under NAFTA 2.0, sorry, I mean the USMCA, because rebranding fixes everything, right? But the rest of those countries? They're getting hit hard. And when their exports to the US get pricier, American companies either eat the cost or pass it on. Spoiler alert, they're not in the mood to eat anything except their profits. To make matters worse, the White House is taking a page out of its 2025 aluminum and steel tariff playbook by expanding the scope to derivative products. Translation, anything that even smells like copper is fair game. And if you think this is just a US problem, think again. The London Metal Exchange saw copper futures drop by 8% in a single day last week, the biggest slump since the pandemic panic of 2020. Why? Because the world's second-largest economy, China, is already hoarding copper like it's the last slice of pizza at a party, and now the US is throwing its own wrench into the global supply chain. Buckle up, folks, global inflation is about to get a copper-colored makeover. Now, let's get to the heart of the matter, shall we? Trump says these tariffs are all about boosting domestic output, the whole "Make America Great Again" shtick. The idea is that by making imported copper products more expensive, American companies will magically start producing more of their own. Sounds great on paper, right? Except, here's the problem, the US doesn't exactly have a thriving domestic copper industry ready to pick up the slack. According to the U.S. Geological Survey, domestic copper mine production in 2024 was just 1.2 million tons, barely enough to cover half of the country's needs. And semi-processed copper? Forget about it. The U.S. imported 600,000 tons of that stuff last year because domestic capacity is, shall we say, lacking. So, what happens when you slap tariffs on imports but don't have the domestic supply to fill the gap? You get shortages, higher prices, and a whole lot of angry businesses. Just look at the steel tariffs of 2018, same playbook, different metal. A 2023 study by the Federal Reserve Bank of New York found that those tariffs cost American consumers and businesses $900 million a month in higher prices. And here's the kicker, for every job saved in the steel industry, 3 jobs were lost in downstream industries like manufacturing and construction. Fast forward to 2025, and we're setting ourselves up for a copper-coated rerun of that disaster. And let's not forget the global ripple effects. The US isn't an island, well, not economically, anyway. When you mess with global supply chains, you don't just hurt your own consumers, you tick off your trading partners. Canada, Germany, South Korea, and Mexico aren't exactly thrilled about this, folks. Retaliatory tariffs are already on the horizon. Canada's already hinting at slapping duties on US exports like energy and agricultural products. And if history is any guide, this tit-for-tat tariff war could shave 0.5% off global GDP by 2026, according to the International Monetary Fund's latest projections. That's $500 billion in lost economic output, all because someone thought tariffs were a winning strategy. Now, let's talk about the real victims here, not the traders, not the politicians, but you, the everyday consumer, and the businesses trying to keep the lights on. Take the construction industry, for example. Copper is a key component in electrical wiring, plumbing, and HVAC systems. The National Association of Home Builders estimates that the average new home in the U.S. already costs $400,000 to build in 2025, up 20% from pre-pandemic levels. Now, with copper prices set to spike, those costs could jump another 5–10%, pricing even more Americans out of the housing market. And don't even get me started on electric vehicles. Copper is critical for EV batteries, and with tariffs driving up costs, that $7,500 EV tax credit you were counting on might not stretch as far as you hoped. And what about small businesses? The mom-and-pop manufacturers who rely on affordable copper to make everything from electronics to machinery. They're getting squeezed from both ends, higher input costs and no ability to compete with bigger firms that can absorb the hit. According to the U.S. Small Business Administration, 60% of small manufacturers reported supply chain disruptions as their top concern in 2025. Now, thanks to these tariffs, that number's only going to climb. So, here we are, folks, staring down the barrel of a policy that's supposed to protect American industry but is more likely to kneecap it. And the irony? Oh, the irony. Trump's tariffs are hitting at a time when the U.S. economy is already grappling with post-pandemic recovery, supply chain snarls, and inflation that's stubbornly hovering around 4%, according to the Bureau of Labor Statistics' latest data. Meanwhile, the Federal Reserve is in a bind. Do they raise interest rates to combat tariff-induced inflation and risk a recession, or do they sit on their hands and let prices spiral out of control? It's a lose-lose situation, folks, and we've got front-row seats to the show. And let's not forget the geopolitical angle. China, the world's copper kingpin, is watching this whole mess unfold with a smirk. They control 50% of global copper refining capacity, according to the International Copper Study Group, and they're more than happy to sell to anyone who isn't slapping tariffs on their products. So, while the US and its allies bicker over trade, China's quietly tightening its grip on the metals market. Who's winning the trade war now, huh? So, what's the takeaway, folks? Trump's copper tariffs are a masterclass in economic satire, promising protectionism but delivering pain, preaching self-reliance but ignoring reality, and all while the rest of the world either laughs or plots revenge. For the average consumer, it means higher prices. For businesses, it means uncertainty. And for the global economy, it means yet another self-inflicted wound in an already shaky recovery. Here at Boss Economics World, we'll keep watching this train wreck unfold, because if there's one thing we love, it's a good economic dumpster fire. Until next time, keep your wallets close, your tariffs closer, and remember, when life gives you copper, make sure it's not taxed at 50%. See you in the comments, and don't forget to smash that like button if you're as baffled by this as I am.